A new report from CIBC is calling for regulators to revisit the B20 stress test. Remember, that requires borrowers to qualify for mortgages at a higher interest rate to ensure that they can handle the payments if rates increase. It was implemented at the end of 2017. Benjamin Tal, Deputy Chief Economist at CIBC Capital Markets, joins us because you're looking at unintended consequence of this. It was meant to make sure that people weren't taking on higher than what they could handle debt burdens and meant to cool the housing market, but you're looking at, well, where have people been pushed as a result? Take us through some of your analysis.
Yes, what I'm saying is that the operation was a success, but, and the issue is that clearly B20 was designed to lower the market, to slow down the market, and it is down. It is down by 8%, the origination market. So clearly, it's a success story as far as the regulators are concerned. But maybe it's too much of a success. That's the question I'm asking. To what extent 200 basis points is the right number? Remember, when this number was introduced, the bank rate, the Bank of Canada rate, was 75 basis points lower. So it went up since then. Also, this B20, the specifications over there, they don't take into account, for example, the fact that income is rising through the course of the mortgage life. Clearly, if you take a 7-year mortgage, 10-year mortgage, you're not being compensated for that in terms of B20. So there are many short falling as far as B20 is concerned, but the number one issue is alternative lending. Alternative lending is the fastest growing segment in the mortgage market. And here we're talking about mixed mortgage investment corporations, and we're talking about individuals. Together, they account for roughly 14-15% of transactions in the mortgage market. That's way too high.
Is it way too high? Just talk about how that has evolved since B20 came into place. Can we pinpoint that the implementation of this regulation actually led to the acceleration of the alternative market?
Yes, we can. If you look at the last 2 years, we have seen actually a significant acceleration. The market, the alternative market, is up by 22% since 2017. Now, what happened in 2017? We have seen the stress test. It was imposed on high mortgage borrowers, namely insured mortgages. That was the first step. The second step, B20, it was imposed on the rest. So we have two stages of, if you wish, B20. And really, that's exactly when we have seen the alternative market taking off. About 22% in the past 2 years. That's very quickly.
So, Benjamin, I mean, you work at a bank, and, it's interesting that you're wagging your finger at somebody who is growing in the alternative lending market. You could argue that you're talking your own book, but let's focus on, well, if B20 is working in the regulated market, why not just impose regulations to the alternative market so that they also have to follow stringent requirements? Why pull back on something, to your point, that is working?
Bingo, that's exactly what I'm saying. I'm saying I think we should regulate the alternative market. I think that's exactly the point. We are transferring risk from the regulated segment of the market to the unregulated segment of the market. We are transferring risk from where there is light to where it's dark. And I say, if this market, alternative lending, is rising so fast, we have to start taking a look what's happening there, because we really don't know. And here I'm talking about mostly individuals, which is basically half of the alternative lending space. So clearly, I'm totally with you on this one. I think that we should increase regulations on this shadowy banking, if you wish. And that's okay. We can do that if we try. So it's not about just looking at B20 in absolute terms. We have to look at what it means to alternative lenders. In addition, I think that B20 itself is maybe too severe. We have to make it a bit more flexible. For example, maybe we can establish a floor rate, let's say 4.5%, in which anything under it, you are subject to the test. For example, if for some reason, for some crazy reasons, during a recession or something, interest rates go down to, let's say, 1%, you will still be qualified at 4.5%. But if interest rates are at 5, 6, you're not qualified. So I think we can play with this number because, quite frankly, the 200 basis points, where did it come from? There is no science behind it. So a year and a half after B20, we have enough information to suggest that maybe it's too severe at this point.
Are you optimistic that this is something that could be adopted as policy? I guess what I'm asking is I mean, we've certainly heard this from those who are realtors, who obviously have a lot of skin in the game and don't like the fact that we've seen home sales plunging in areas like Toronto and Vancouver. But is this reaching the ears of policymakers?
Difficult to say. I know that OSFI is very happy with the results. That's exactly what they wanted to see, because most of the damage is happening in the less affordable markets like Toronto and Vancouver, so mission accomplished, if you wish. The question is, again, if it's too much of a success. That's the only question I'm asking. Recently, we have seen some tweets from OSFI that maybe they will start looking at it, maybe they will consider it, but no commitment whatsoever.
Just lastly, you say it's too much of a success. How are you measuring that? Because, you know, prices really haven't moved all that much, and some of these markets are still quite unaffordable for the average person.
Yes, but in order for them to be affordable, they have to go down by 20, 30%. And for this, you need a major shock. So do you want this major shock? I think that we are trying to fight supply issues with demand tools. The main reason why Toronto is expensive and will remain expensive from a long-term perspective is because of the lack of supply. The number one reason why Vancouver is so expensive is because of the lack of supply. And if you fight supply with demand tools, you will not win. At the margin, of course, you will gain some success here, but that's not the story. The story is supply. You deal with supply, you deal with affordability. You cannot reach affordability from a long-term perspective fighting demand all the time.